As Indians continue to jump onto the online gaming bandwagon, the number of gamers in the country is expected to rise. 433 million currently to over 650 million by FY25. And we've seen a lot of startups as well that have sprung up in the online gaming space. But there's been a long-standing debate on TDS, on how much there is going to be GST, and a lot of ambiguity that does surround online gaming when it comes to the taxation rate. So how exactly will your wallet get impacted, given the fact that the new rules as well were announced? The Finance Minister announced a 30% tax levy on the net winnings from online gaming platforms. Now, with this change, you will only have to pay tax at the year end based on the net winnings. Further, there's been a removal of the minimum threshold limit of 10,000 rupees for TDS purposes. This means that TDS will be calculated either at the end of the financial year or at the time of withdrawal. Earlier, the tax was deducted on each of the winnings. The government has also seen that gaming platforms are deducting tax by applying the threshold of 10,000 rupees per transaction and avoiding TDS by splitting a winning into multiple transactions, each below 10,000 rupees, which is against the legislative intent. So the proposed change now offers greater transparency as well as a standardized taxation mechanism for online gaming. Now, a little more clarity on game of skill, on game of chance, that is still required by the industry, but the gaming industry has been fairly vocal that they do want some sort of a differentiation on skill-based gaming as well as on game of chance. So in a bid to simplify this process, the TDS calculation, the government has proposed two new provisions. That can be explained with the example. Say Mr. A earned a net winning of 5,000 rupees via online gaming. Now the gaming platform is required to deduct taxes at the rate of 30%. That's about 1,500 rupees. Such a deduction of taxes is only required on winnings that are above 10,000 rupees under the current practice. Further, Mr. A will have to offer this income in the tax return at 30%. However, he can claim credit of taxes deducted. Therefore, there may not be any further liability. Now, recently, you also had the Ministry of Electronics and IT that announced new regulations in order to protect online gamers from any harmful content and any sort of addiction. So there's a self-regulation model that has been applied for the online gaming sector, where SROs are going to approve the games that can operate in the country, and that's all going to be in accordance with the rules. These new online gaming rules have been included in the amendment in the IT rules of 2021. Days after the IT ministry notified these rules, you've also got the group of ministers, or GOM, that is going to review the GST on online gaming, casinos, horse racing, and we understand that that's likely to remain at 18% of the gross gaming revenue, or GGR. What is GGR? It's the fee that is charged by an online skill gaming platform as a skills charge to rationalize the participation of players in the game on the platform. Recently, you had the Meghalaya Chief Minister who recommended the highest rate of 28% on betting, casinos and horse racing, drawing a distinction between the games of skill as well as game of chance. But the group of ministers is actually going to freeze the recommendation, the final ones, only after introducing the IT Intermediary Amendment Rules 2023. The GST Council is going to take this decision on the levy at its next meeting, which could be by the end of May or even in the first week of June. Now, currently, online gaming, which does not involve any betting, that attracts a GST rate of 18% on GRR. Earlier, they had recommended a 28% GST on GGR, irrespective of whether it was a game of chance or it was a game of skill. So the charge in stance follows this Finance Act 2023, which had actually recognized the online gaming industry as a new age industry, distinguishing it from gambling and betting completely.
If you like this video, then like, share and subscribe to ET Now.